Hello and welcome to FT Live, our monthly FinTech video interview series. I'm Martin Arnold, the FT's banking editor, and this week it is my pleasure to be joined by Mike Laven, Chief Executive of Currency Cloud, which provides cross-border payment services to businesses. Mike is a 15-year veteran of the FinTech industry and will be discussing everything from Bitcoin to Brexit with us. Please send your questions in for Mike, and I will try to ask as many as possible during our conversation. So Mike, welcome to the FT. Would you start off by telling us a bit more about Currency Cloud? As I said, you're mainly providing payment services to businesses, other businesses, but tell us a bit more about it.
So thank you for having me, and I'm pleased that I'm only a 15-year veteran. I could rack up a few more years than that. Currency Cloud, we were initially funded in 2012. We provide cross-border payment services, but we don't market directly to end users. We market to other businesses and to other payment firms. So our customers are banks, payment firms of all kinds, brokers, e-markets, e-commerce, but it's other firms who are making payments principally for other businesses. So it's we also we look at ourselves as technology-led. To use the well-used phrase, people access us via an API. So our belief is that in the world of business, many payments are different. Some come from payables, some from receivables, some from payroll, some from invoicing, some from trade finance. Each of those have a different workflow. So we look at that as a technical challenge. You have to get the compliance right, you have to get the end-to-end movement right, and you have to make it very, very simple for the customer. And that's in addition to making it cheap and transparent. So everything always has to be cheap and fast, but in the world of business, cheap and fast isn't enough. It has to also be easy to use, and business presents a whole series of other challenges for that. We do right now about $1 billion a month of transfer, and that's been growing at about 100% a year. So we're pretty well established, and we have customers, Travelex, Revolut, who are quite well known in the FinTech world, and we're providing services for about 250 companies right now and millions of end users.
And you're mainly European-based, or are you truly global?
Well, we're based in London. Our customers, and we also have an office in New York. About 80% of our business is in Europe right now, 20% is in the US. We also have a growing business in Asia. So the growth and expansion plans of the company are to service customers around the world. I mean, we pay out, in our business there's a distinction between in and out. We pay out to over 200 currencies, 35 currencies all over the world. We only have customers where we can be regulated to have them, which is North America and Europe and a few other places around the world.
Yeah. And are you offering an alternative to banks? Are businesses coming to you instead of going to banks, or are you providing a kind of intermediary between businesses and the banks? How does that work?
Sure. So there's been a couple of interesting surveys lately. There was one from Juniper last week, one from KeyBank this week, that shows that business banking on a cross-border basis is about 5% digitized. We have to run on top of the bank's rails. But banks are expensive. They are ease of use isn't there, and also accessing via an API isn't there. So if you would think of it, we sit on top of the rails that are available. Local banks in various countries, Barclays here, a whole series of banks, and then we offer those services to customers in a way that's easier to use. And because we're aggregating up the demand from our 250 customers, we provide them effectively wholesale services. And we'll have multiple different banks, so we can do it cheaper, faster, and easier than any one single bank.
Right. So you've got the scale that the banks haven't got, is that?
Well, I think that it's the API is the issue. We have the ability to allow the customer to integrate their platform into us so that they can do volume processing.
I see.
And we then use the services that are provided by the banks at sort of a wholesale basis. They're selling wholesale to us. We're providing that on to our customers. The individual customers probably couldn't do that by themselves.
Okay. Now, you're quite a strong believer in the future of banks. You think that fintechs aren't going to replace banks anytime soon. But this debate is starting to rumble on, and there is a debate now about how much market share are fintechs going to take away from the banks and in which areas. Now, you're in the business-to-business area of payments rather than business to consumer or consumer to business. And you think there's a difference there, am I right?
Well, I remember sort of a consumer payment, we're in the payments business, a consumer payment is fairly straightforward. I send $100 to my mother in China. She confirms it via WhatsApp, and the transaction is done. A business payment is far more complex. It could be batched, so there's a timing difference. Again, it could come out of an internal system like payroll. When I look at how the world of the future will be, fintechs as the interface to the consumer will certainly take business away from banks. But at the core of that infrastructure, or the core of that network, someone is going to be holding the asset.
Yeah.
And the asset will be both the money, but also becomes the data.
Yes.
So I think we're looking at a world that will be far more, I don't think we know what that world will look like. So you've got a central asset that has all of the data. You've got a series of fintech providers who are highly specialized. And as we look at the way the fintech world is developing, it's not just loans and payments and international, but it's wealth management and personal expense management and a whole series of things that are dependent on getting the data from your transaction account. So how that world is going to look 10 years from now, I'm not sure. I think the client interface part of it, whether it's a business interface or a consumer interface, will be, if not predominantly, will be very much with fintechs. But I think that banks as the repository of the central data repository and where the money is will continue to be there. So it's going to be actually a much more complex and layered world. And how we make our way through that, I think, is one that we're going to have to find out as we go through in the next few years.
I've got a question here from Elizabeth Montero, who asks, I think, a very pertinent question in this discussion about the fintechs versus the big banks.
Right.
What about compliance in fintechs? And obviously, you're in the payments business. How do you deal with that compliance issue and making sure that you've got AML and KYC dealt with and handled? You haven't got the resources of the big banks to do all the checks that they do, have you?
Well, so first of all, compliance is the name of the game, and again, in providing cross-border services to businesses, there's more complexity in compliance than there is on the individual basis. And it has sort of three pieces. It has the onboarding piece, know your customer.
Yeah.
It has the AML piece, which is the money laundering piece and checking against lists, and transaction monitoring about understanding the limits of individual customers where it is. In the world of RegTech, there's now a series of vendors who can provide those things at an incredibly lower cost and access than were available before. One of the things about regulation and compliance is there are no shortcuts. Often I talk to a fintech startup and they say, oh, if only we could do this regulation somewhat differently, we would have this great business. Well, the answer is, no, you can't. I think one of the interesting things for the world of fintech, as the regulators and compliance burden gets higher and higher, that creates a barrier to entry to newer startups. So there's no shortcuts. We invest a tremendous amount of money in regulation and compliance, and we actually have to do it at the same level as the banks.
Right.
I think an important point.
But the banks are employing thousands of people in this. And
well,
spending.
we're massively automated. We do some of the things that the banks do with 8 people that they can do with 2,000.
Right.
I don't know if that's exactly that level, but they can do with more. I think a very important point is we're part of this network where it's not just the regulator who's looking at you all the time, it's also the banks are looking at you. If you think of it, there's a whole web of relationships that have to be compliant. GDPR is the same way. If you think of it, there's upstream and downstream compliance. You can't play unless you're there. So our level of compliance is looked at continually, and it's a major investment place for us. And it's the when we look at the world of business, I think of business cross-border, it's really the major thing you need to get right in terms of making the user experience right.
Okay. I mean, you're on the board of the Emerging Payments Association, which is a fintech trade body based here in London. Do you think that overall fintechs are getting this right? Is this still an area that needs more work?
With the world of compliance.
Yeah.
Yeah. So listen, the EPA tries to be a policy voice for the changes in fintech, and we for example advocated a couple of years ago for fintech companies to be directly connected to the UK faster payment system rather than going
Yeah.
through banks, and that was actually
Which is
quite
happening
successful.
now.
Which has happened. It's happening slowly, but it's happening, and that came out of a lot of the things the EPA did. I think that the level of compliance that people have to meet continues to go up. You don't have a choice. It's not like there's a way to get around it. But I think what we're starting to see as the compliance level goes up, as the Currency Cloud, our customers 4 or 5 years ago were all regulated. But as the level of what it takes to be regulated goes up, then we're seeing more companies coming to us who will be unregulated. And then we'll then have to figure out how we deal with them and deal with their customers in a structure that looks different. Again, this isn't another open banking
Yeah.
PSD2 question. You're going to have
That's the second Payment Services Directive from
Yeah,
the EU
yeah, sorry,
that
PSD.
came into force.
You're
this
going to
year.
see more companies with financial information and financial data who are technology companies and not regulated, yet working in a regulated industry. How that all is going to play out remains to be seen. Remember, e-commerce companies
Yeah.
that take payments are now may have to be regulated as payment firms.
Yeah.
So again, there's a major restructuring that comes from PSD2 and open banking that's really playing out right
well,
now.
I mean, PayPal came out of eBay, a marketplace that spawned a electronic payments company. Alipay has come out of Alibaba. This is there is an obvious
Yeah, absolutely.
synergy there between e-commerce companies and electronic payments companies.
Absolutely, and now with the new banking regulations,
Yeah.
the question is for those e-commerce companies, will they have to be regulated as payment firms?
Yeah.
And if they're not, how will they then deal in what's become a new layered market where electronic service providers will be providing information and data, but where the regulated point is will become complex.
Yeah. And what about the shared economy, Mike, as well? So the likes of Uber, Airbnb, these types of companies which